Hi guys, this is Lee with the Market Sense for the week of May 26th, 2020. The charts in this presentation are provided to us by Gettess and come from their Trade Navigator software. And this is our boring weekly bond chart, and I'm sorry they're so boring. I'm sorry there's not much to do here, but it's kind of understanding. And if you think about it, it's understandable. Uh, we have incredibly low interest rates and no reason to believe they're moving off of that low rate anytime soon. So what would it take to get bonds to do anything? We do have our momentum indicator down here at the bottom of the screen is staying relatively negative. Now, when you see stuff like this in a sideways pattern, it does suggest that the probability favors a downside move, um, but doesn't mean they will. It just means the probabilities favor it. And right now, we're looking at around the 178 level as being support this week, and the best resistance around 181.26 up in this area. And as I've been saying, you can nibble these edges if you want, try to pick up a little bit. When you're wrong, and at some point we will be, you'll be wrong in a big hurry, and then it'll be very difficult to get out of the bad trade when it goes against you. But until they go, below this 177 area or up here above 183, nothing major is going to happen. And I keep pointing to these extremes here from these 2 weeks. I don't think we'll go out of that range for the year. I really don't. So again, I'm sorry it's so boring, but that's what it is, and it's just darn hard to find much of anything to do there. Stocks are frustrating for an entirely different reason. Um, yeah, they keep running into resistance on this weekly chart, and they don't get summarily rejected from it, but they don't just drive through it and make everything look like they're blowing off either. That's a little frustrating. The more frustrating aspect is so much of the move seems to be happening at off hours now, and not necessarily because there's any major news, great economic news from China or anything. No, not really. They're just moving, and then not so much during the day. You take over the Memorial weekend, they opened Tuesday morning like 60 points higher than they closed Friday. And then the day session only had like a 30-point range and actually closed down 22 from where it opened. Now, that's still a nice up day, but the movement was all when some of us U.S. traders would like to be sleeping, and that's just not really helpful. The 3005 area is what is resistance, and since they seem to be ignoring all possible negative economic news, I expect they're going to break it now. I've been expecting them to take out this low forever. I'm going to hold to that. I still think they will. I'm just now thinking maybe it won't be until fall and may coincide with the next round of the COVID-19. I don't know that. That's just kind of a guess I have. But at this point, they seem to be able to shrug off anything that could possibly be bad news and still find a way to grind higher. I don't know if they'll blow off higher, if they'll, really accelerate, but they just seem to be willing to take any good news as a reason to go up. We really thought the best support this week, if they're going to go up, was 28.86, and they haven't been anywhere near that. They actually seem to be looking at this 29.50 area as possibly being the support to drive them higher. That wasn't really expected, and it's actually a fairly bullish development. So, you can't argue with the market. It's still finding a way to grind higher. I just wish they'd set something up during the day so that they'd actually be tradable for us US guys. So I'm sorry, that's all we've got for you today. I sure hope you can find something to get involved with that'll make you some